Let's welcome in our next guest on the show. Vipul Prasad, founder and CEO at Magadh Capital, is now with us. Vipul, let's start with the markets first. What do you make of this recent correction?
Yeah, hi. So, to some extent, in my view, the market has been running ahead of fundamentals. Of course, driven by the results that we have had post-elections. The strong... Hello?
Go ahead, sir.
Can you hear me?
Yeah.
Yeah, sorry. So, I was saying that post the election verdict, obviously the markets got super excited, and that's why, of course, we saw some sort of a run-up. Now, definitely a lot will depend, because already we have reached at a level that is, in terms of PE multiple, close to historical highs. Of course, it doesn't necessarily mean that we are in for some big slump or something, but at the same time, the markets will really look for direction in terms of where can the next leg come from. To me, one sustainable source can come from earnings improvement, and that has to wait for another 2 quarters or so. So after that, re-rating obviously is unlikely incrementally from here. At the same time, earnings, if they start becoming, taking a sustainable trajectory, beginning, let's say, second half of fiscal 20, then we can see a decent market improvement from here. But very importantly, we have one event, that's the budget. That's on 5th July, obviously, because generally for some time budgets have been non-event, because most of the market driving announcements are typically nowadays they happen outside of the budget. But this year being the first year of NDA 2, and also given the weakness that we have seen in the broader economy, I think the government should at least give do some sort of unveiling of reform roadmap from here. So I think the markets will wait for that as an indicator. So let's see how does it go from there. To me, there are some buckets which are heavily dependent, on which the market will be heavily dependent. So in terms of reforms, probably we can think of labor, we can think of PSU reforms, or how does the government go about changing the way subsidies given out, or for that matter, direct tax code has been in the offing for a long while, but I think the new government with a strong verdict can have the courage to go ahead with these kind of reforms. In fact, there are 2 sectors where again some political will is required. So one is power, and defense is another not exactly in terms of reform, but defense acquisitions need to be accelerated, and so that will also have a bearing on the domestic industry. So yeah,
right, Vipul, you know,
these are some of the potential drivers that we can look at.
So as you were saying, you know, domestic, the mandate is strong, markets got excited, but on the other hand, don't you think India is also grappling with a lot of negative global cues? Global growth is not strong. There are a lot of issues regarding trade tensions, what's happening to oil. How do you think markets will, you know, between bad global news and decent or positive domestic news, how do you think FIIs, DIIs will react?
See, right now, definitely, in fact, lacking in incremental news in the short term from the domestic sources. Probably Indian markets will try to take cues from global developments, especially China-US trade relations. But beyond that, if you see, if global news is not too great, unless we are talking of a big slump, which looks unlikely, but as long as we into India, so that way it will be good, because as the government starts, it will also depend on the way government rolls out its reform plan and the way it executes those plans. So we will get to see a lot of that in the next 3-6 months, as in, like, is the government serious about changing its course versus the last 2-3 years, and how is it approaching in terms of big changes that are required, that have been due for a long time. So coming back to your question directly, yes, there are issues on China-US relationships, and it's highly uncertain the way it's going right now. In terms of oil, actually, that can be another good indicator for India, because from a medium to longer term perspective, it is getting increasingly clearer that oil prices are on a downtrend. So for a big importer of oil like India, that can be a good news. So that's the way I'm looking at it. Only one problem, as I highlighted earlier also, that in terms of PE multiples, we are not looking at a very great level. So for that, we have to wait for some time before earnings start kicking in for the PE multiples to subside a bit. For the FIIs to be more excited about India. But right now, it's just about the new government that has come in and the kind of strong verdict that they have received and the kind of agenda that they have.
Vipul, we've also been talking about how the market seems to be getting increasingly averse to risk, given how so many of those high beta names have really been pummeled and continue to be, especially if you see them year to date. Just when we thought perhaps, the mood, might have changed post those election results with an eye to reforms, once again, big question marks around whether or not markets are ready for risk. What do you think?
Yeah, I think that especially what we have seen in terms of the way economy has performed, the way some of the high frequency indicators have come out. So it's not just valuations. That is one part, that if valuations are high, then all the stocks are vulnerable, especially the high beta ones. But at the same time, increasingly people are feeling that economy is deteriorating further. So in that even pockets of strength like consumption name, consumer staples, they also have been talking about decline, and in fact fourth quarter was not too great for consumer staple companies. So, and autos obviously have been in a state of shambles. So in all this, it does look like that risk is to be avoided, and especially with the chances of risk coming in from global indicators that also have gone up. So in that sense, yes, you are correct that high beta names look more vulnerable. But at the same time, we also have to keep in mind that a large part of the economic downtrend that we have seen in the last 3-4 months is also cyclical in nature. And to some extent, it also has been driven by the long drawn out election process. So in my view, many of these sectors will start recovering in the next couple of quarters. And also, a lot will also depend on the way the government tightens up from here. So we'll see. And one more thing worth keeping in mind here is that for a long time, for quite a while now, we have been seeing policy rate reductions, although they have not been entirely passed on. So it's also a question of liquidity. So in the coming months or so, I do expect that some sort of benefits will come in for some of the sectors because of declining rates. So all these things should combine. In the next 6 months, we should be in a much better situation as far as earnings grow, and also for the so-called higher beta names, some of them.
Let's come back to you. Markets have actually suddenly fallen. We just did a market check like a few minutes ago and it was down about 50 points, and right now there has been a sudden 0.3% fall and Nifty suddenly is down about 100 points below. No particular news flow that I can identify, but that's probably seeing some selling pressure continue. The mid cap index is down 1%, the small cap index is down 0.8%, so that's what you're looking at when you look at the market space. 52 points down for the small cap space, 6295 as far as the small cap index goes. What's losing out in the session right now? So when I just would look at the Nifty 100 losers, so the Nifty 100 movers, I think that will give us a sense of really what's happened in the large cap space. And if I just look at the top losers and not probably the gainers, from the mid cap space, Reliance Cap, Reliance Infra, Z is now down 5%. IndusInd Bank, it was down 4%, continues to be the case. Biocon is down another 3% odd. Aurobindo, I think it was earlier down 2%, now it's down 3%, so that's lost a bit. Bharti Airtel at about 350 rupees. India Bull Housing down 3%. United Spirits, Ambuja Cement, Axis Bank, Godrej Consumer. And as we are speaking, the selling is also intensifying. 112 points now down for the Nifty. It's not so much about the points being down, it's just about the velocity and the way the markets have really corrected. New India Assurance 2% higher. ICICI Lombard maintaining on to gains. Sun Pharma is also up around 0.6, 0.7 odd percent. From the Nifty movers, Infratel and Sun Pharma are the two decent gainers, but in the loser list, whatever we have not spoken, so you have a Axis Bank down 2%, you have a Kotak, you have a Tata Motors, you have a Yes Bank, you have a Eicher Motors which has fallen. So all these names have suddenly started to see some amount of movement on the downside. Vipul, what happens when markets keep falling like this and every now and then you start to get these sudden move on the downside? Does it take away investors? Does it take away a lot of participation away from the market?
See, in the retail side, it does happen like that, no doubt about that. But for the foreign investors, or for that matter, the institutional investors, I would say that as long as we are in a range of 3, 4, 5%, probably it doesn't dampen sentiments big time. In fact, if you would ask me, I would be happier that way, in a sense that probably the valuations coming down to more realistic levels. Probably you can take fresh bets also in the market. Minus the earnings growth, yes, this is the way to be able to rejig your portfolio. In a way, this gives you that opportunity. But yes, if you are talking about this goes all the way for a 10% or a 15% decline, then yes, what I'm saying doesn't make sense, because then not just retail participation, but also people will be scared on the institution side, and foreign investors will also at least hold up their hands for some time.
Vipul, a quick look at some of these metal names that managed to see some strength this week. Is this a short-term kind of buying that we're looking at, or anything bigger there that you're watching out for, perhaps on the back of global prices or any other trend?
Yeah, right now it's more, the sector is being driven more by the global trends, especially the focus is on China-US trade war, and how, if at all, if they are able to resolve it, and how is it resolved, because many of these commodity prices are at levels which are much lower than even middle levels, mid-cycle levels. For example, if one looks at aluminum, or for that matter even in case of some particular grades of steel. So that will be the key driver definitely for these stocks. But some stocks in this category do show some potential from a long-term perspective, because many of them have levers which can improve their return on equities. In fact, margins can go up, costs can come down substantially. Then they have already almost finished their capex, which means that in the coming 2-3 years, without incrementally spending much on capacity expansion, their top line can move up, volumes can move up. So yes, some of these stocks do look good, but these are not for the short term. From a long-term perspective, some of these stocks are looking quite well placed. But definitely it'll be difficult to go for a sort of a blanket buying. Obviously, it's not in this situation wherein global sentiments are not very clear. There's no point in going for maybe a blanket buying in this sector.
Right. Right, Vipul. Thanks so much for taking our time.
And one more thing I'd want to add here, that some of the stocks that I was talking about, many of them, yeah.
Go ahead. Complete your point, Vipul.
Okay, sorry. Yeah. So I was saying that valuations for some of them have come down to levels which are close to historical lows. So it's a question of when do you get the lift from global sentiments, and when do you start seeing on-ground improvement on balance sheet and P&L. So maybe it can take maybe 2 quarters, it may take 4 quarters, but definitely these are looking good stocks. Yeah.
Right, Vipul. Thanks so much, Vipul, for joining us this afternoon and giving us your perspective.